Introduction. Welcome to this summary of Trading in the Shadow of the Smart Money by Gavin Holmes. This book uncovers the hidden forces that truly move the market, professional traders, or what Gavin Holmes calls the smart money. Most retail traders lose money not because they lack knowledge, but because they are unaware of how the smart money operates. In this summary, we'll explore how the smart money manipulates price, creates traps, and leaves behind clues that you can learn to identify. Gavin Holmes emphasizes that true trading success comes from understanding volume spread analysis, VSA, and using it to align your trades with the professionals, not against them. Chapter 1: Who is the smart money? Gavin Holmes begins by explaining who the smart money is: large institutional players such as banks, hedge funds, and professional traders. These players have the resources, information, and influence to move markets in their favor. They don't just react to price. They create price moves. The key idea is that these professionals must buy low and sell high. But they can't simply place huge orders without moving the market unfavorably. So, they manipulate price action to create fear and greed among retail traders, then trade against them. Understanding this manipulation is the first step to trading with, not against, the smart money. Chapter 2: Market manipulation is real. Gavin Holmes argues that manipulation is not a conspiracy, it's a fact of how markets function. Large players use tactics such as false breakouts, fake news, or sudden volume spikes to mislead the public. He explains how smart money often marks up prices to encourage buying, only to sell into that buying pressure. Similarly, they may mark prices down rapidly to induce panic selling, allowing them to buy at a discount. Retail traders who rely solely on indicators often fall into these traps because they ignore volume, the true footprint of smart money activity. Chapter 3: Volume is the footprint of the smart money. Volume spread analysis, VSA, is the foundation of Gavin Holmes' strategy. He defines VSA as the study of the relationship between price, volume, and spread, the range of a bar. When volume is unusually high or low, especially at key support or resistance zones, it tells a story. For example, high volume on a down bar may indicate accumulation, smart money buying. High volume on an up bar could signal distribution, smart money selling. The lesson: price can lie, but volume doesn't. If you want to follow the smart money, you must understand their volume signatures. Chapter 4: The 3 Laws of VSA. Gavin Holmes outlines 3 principles that govern market movement. 1. The law of supply and demand: if demand exceeds supply, prices rise. If supply exceeds demand, prices fall. But in real-time charts, this balance is shown through volume and spread, not economics. 2. The law of cause and effect. Every move in the market has a cause, accumulation or distribution, and an effect, a markup or markdown. Smart money creates a cause, e.g., absorbing volume, before initiating a price move. 3. The law of effort versus result: if the effort, volume, is high but the result, price movement, is low, it signals absorption or resistance. These laws allow traders to decode hidden intentions behind price action. Chapter 5: Traps set by the smart money. Gavin Holmes teaches that most retail traders lose because they fall into common traps. Buying breakouts without checking volume. Selling during shakeouts designed to induce panic. Chasing price moves without recognizing the setup. Smart money sets these traps deliberately. For example, before a big uptrend, they may push the price down to trigger stop losses and absorb supply. Once the weak hands are out, they drive prices up. The takeaway: always question strong price moves. Ask, who's on the other side, and what is their intent? Chapter 6: Identifying strength and weakness. Strength and weakness in the market are not about rising or falling prices, they're about what the volume and spread reveal. Signs of strength. High volume on a wide spread down bar, especially near previous support, indicates buying. No follow-through after a sell-off shows smart money is absorbing supply. Signs of weakness. High volume up bars with little progress, smart money selling into public buying. Narrow spreads with increasing volume near resistance, potential distribution. Learning to read these signs requires practice, but they are the roadmap to where smart money is active. Chapter 7: The Role of News and Media. Gavin Holmes explains how news is often used as a tool for manipulation. By the time a major news story hits the public, smart money has already acted. He cautions traders not to trade based on the news, as it often marks the end of a move, not the beginning. In fact, bullish news often appears at market tops, while bearish news appears at bottoms. The smarter approach is to analyze what the smart money is doing before the news hits. Chapter 8: The Trading Plan. To trade successfully, you must have a clear plan. Gavin Holmes emphasizes: define your edge using VSA. Wait for confirmation of smart money activity. Plan entries, stop losses, and targets in advance. Journal every trade to identify patterns and improve. He also encourages using multiple timeframes for confirmation. For example, strength on a 1-hour chart confirmed by signs on the 5-minute chart increases confidence. Patience and discipline are key. Without a plan, you are reacting, not trading. Chapter 9: Common Mistakes Retail Traders Make. This chapter addresses typical errors. Overtrading, trading too frequently without valid setups. Ignoring volume, using price-only strategies that miss critical context. Revenge trading, trying to recover losses emotionally. Impatience. Entering trades before a setup is complete. Gavin Holmes reminds traders that successful trading is not about predicting every move, it's about aligning with smart money and letting your edge play out. Chapter 10: Case Studies and Chart Examples. Gavin Holmes includes real-world chart examples to illustrate VSA in action. He shows how smart money leaves behind clues. Stopping volume at bottoms. No demand bars before a sell-off. Test bars after absorption. These patterns appear across all markets, stocks, forex, futures, and crypto. The key is not to memorize patterns but to understand the logic behind them. Conclusion: trade in harmony with the smart money. Gavin Holmes concludes by urging traders to stop fighting the market and start understanding it. The smart money operates on logic, patience, and strategic intent. They accumulate, test, trap, and mark up down prices deliberately. Your job is not to beat them, but to join them. To do this, master volume spread analysis, stay emotionally neutral, and never stop learning. The market is always changing, but the behavior of smart money remains consistent. If you can read their signals, you can trade with confidence and clarity.